Hi traders, and welcome to this week's edition of the Keyzone Traders Trade of the Week. Now this week we're going to look at a strategy that we traded on DAX, and we're going to look at how when you tie in the higher time frame context and you actually build the skills to be able to read support and resistance and identify the right support and resistance areas, we can still get really good trade locations even if it's against a powerful move in the market. So let's go take a look. Hi traders, so we're going to look at when you can identify the right support areas or resistance areas even for that matter. It can give you some good trade locations even when you're against a strong move in the market. So this was our report on the 18th of January which said that there was support at 830 to 845, but if you've got a sustained break below it, we can see moves to 700 to 725 support. So let's go and have a look at the trade that we took on the DAX. Right, so this is a DAX. Now, we said in the report, as I say, below 830 to 845 support, you can see we had a clear support zone from over here. This area here was support. So we had a clear support zone. We got an impulsive move on the open. So we had the market open here, really impulsive push down and a really strong move. Now, when you see this type of move and you see a really strong move, you want to move to the higher time frames to look for your reversal signals because you're fighting against a really strong order flow in the market. So by moving up time frames, it allows you to get better signals rather than getting chopped in and out of the market. So we had this move down here, and as we said in the report, in the morning report, breaks below there and sustained breaks below there, which this clearly was, would see moves down to this 15700 support zone. And you can see we moved down below it and we took this we got the liquidity grab that we always talk about here where we moved below the zone. And there was also a swing low from a little while ago. If I just show you that. So this was a very subtle swing low that we had identified that was potentially going to be looked to take out for a liquidity grab. As you can see, it's very subtle, but it was something that we had an eye on in terms of when we took this swing low out here, that maybe it just wanted to identify and take out that swing low there as well, and it took it out just by a little bit. So that was where we that was why we saw the liquidity grab that we always look for. We'd identified that. It was with the higher time frame support zone. So now let's go back and have a look at the signal that we took. So having identified the area of liquidity that we're taking out, having identified a key support zone, we had this signal, and we've got the reversal signal here. Now, it's not. I would have preferred this signal to be slightly higher. I would have preferred the entry to be further up into this zone to confirm the false breaks. It was a fairly aggressive entry, but I was still confident that the support zone was going to hold, and we'd had this liquidity grab. So we had that entry just above the top of that bar, and we had our stop just below the low, and we went to target back towards the moving averages up here. So often when you get these sorts of moves, at some point price will revert at least back to the moving averages, and potentially even back to the breakdown area or the previous support area, which turns into resistance. So this was the trade that we had, and as you can see, we as the moving averages come in, we actually moved our target down. I think our actual final target was around 15790 because this started moving below, and as you can see, we just took the took our profits at 15790. It just tagged our take profit target before having that reaction from the moving averages. Now this was a nice trade. As you can see, it was 1.6 to 1 our trade. Now as I say, with these ones, when you get these really strong support zones and you're on the higher time frame, you can actually look to leave runners, or you can target back to the previous breakdown area, or the previous support zone, which now should act as resistance. Markets can generally be attracted back to those areas of liquidity. So you could always do that, and as you can see, it takes a little bit longer and it took a while, but eventually price did return back to that area before reacting from it. So this is just to show that even against really strong moves in the market, if you can identify really good support zones and really good resistance zones, we can actually still get really good trade placements for our trades. And also just to be aware of managing trades, when you've got these strong moves, don't be too greedy with your targets. Look for moves back to those moving averages. If you're with the overall trend and you start seeing some impulsive price action and momentum with your trade, there's no harm in... You should always manage a trade, but there's no harm in targeting that previous zone of support, which could now turn resistance. And if you was in the other way, a previous zone of resistance, which now could act as support, because those areas are often attracted in the market. So that's this week's Trade of the Week. I hope you found it useful, and I'll speak to you again next week.